Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, and as always, Monday, same time, same place, we want to discuss cycles. Today we are live. I try to monitor your comments. What's on the agenda for today? I will give you a quick overview of market cycles in today's environment. However, there's not much new compared to last week. So the longer term analysis, I would refer to last week's session. I will give you just a quick update today. A second, I have received analysis from Peter Eliades, stockmarketcycles.com. I did an interview with him. He is doing cycle price projections based on the Hearst model and the future line of demarcation technique introduced by Hearst. And he shared a very interesting analysis he did with me, and I'm allowed to share it with you today. So I feel pleased to do that. Second, on the FANG index. And last but not least, third topic for today, I received a lot of questions about related to technical analysis. So, for example, the Springboard delta indicator, which is a cyclic oscillator measuring the performance divergence between bonds and stocks, which worked quite well in the current environment. It will not work always. And I was asked if I can share this indicator with you, which I will do today. So that's the third topic you will receive from today's session. Okay, let's get into it. First, agenda topic, let's review current cycles. Let's switch to the chart, and I will start with the S&P. First here, that's latest data shown here with our cycle analysis. Just need to organize my screen here with our cycle analyzer. And I've picked the two key cycles, which you can see here, which is 80, the most dominant cycle here with the length of 80, and the one which is not from a strength perspective, and 178 days, which is here in the spectrum. It's more plateau. So based on our original criteria, you need to be careful. But 178 days is a very prominent cycle over the last several years. So that's the reason these two cycles are valid to build a composite model. 80-day cycle is the most dominant one. You see it showing up here in the top list here with the highest strength, good amplitude, high battle score, and 170 something, because this is a very consistent cycle, which is available in the major S&P for years now. If you just combine these two cycles, you will see here in our forecasting plot. And that's what I bring to your attention. That's the same which I more or less shared already last week with much more details in the explanation, that we might see a short, or we are at least in the final stage of peaking cycles. Please excuse for that. I think last week the peak was indicated for the 12th of November. It shifted slightly 19th November. So but I won't pay too much attention to the exact peaking date. You could argue here from wait a second, for the indication here, so that we already arrived at this peaking area here. So that's the peaking area, and we might see how this will work out, what we see here. But we need to be careful. We arrived now at the peaking window if we look at the composite and the larger cycles, that's the view if you just look at the S&P. And a similar situation, and I showed you also last week, if we use a proxy for the tech stocks like Apple, which has a large market capitalization, you will, and I shared the view more weeks in the past. So this is the model I shared here, I think somewhere in August, and you see the light blue data is out of sample. So this data was not used to build the composite. And I explained and introduced this cycle analysis last week, and please refer to last week. It showed a flat period here in the area for end October, beginning of November, and that's now the interesting part. So this is the flat period here, and this was so we had the downward projection until this point in time, and you see what happened here from this here. So this was the projection downward into this area, and now sideways move into this area, and then continuing the downwards move. And the large ups and down in the Apple stock is a good indication that we have moving sideways here in this window. And if we update this analysis with current cycles, and this is what I started last week, and if we just add the latest data, that this flat plateau here now looks like there's a more dominant short-term cycle, and this short-term cycle is now also seen here in this peak. But anyhow, we are in the peaking area, and if you look at the raw data, and that's now the next topic I want to highlight here together with you is Apple. Let's make this even larger here. Apple is making new lows here. So I think it has even taken out the previous lows we saw here in September and October, and is now back to new lows here. If we just look at this chart here, and this gets even more interesting if you start to look at the FANG indices, which we will do in a second. So that's the quick update, just looking at the daily cycle situation in the stock market. So this week might be interesting as the cycles models are peaking, and at least starting next week, all cycle models point downwards. So no really any news here. That's what I shared with some more information last week already. So please refer to last week's session if you want to have more in-depth analysis on that. First point. Second point, I received a Hearst cycle projection update from Peter Eliades, which I'm allowed to share with you here in this session, and I'm happy to do so. It was based on a discussion I had with Peter on the FANG stock indices. So for example, if you look at the raw FANG data, so Facebook, Apple, Amazon, Netflix, Google, so these are the 5 companies which build up the FANG index. And give me a second, I will just open the chart here for you, and then you can follow me. Just a moment. You will see that this index is not making any new highs or tops in the markets. So let's get back to this chart here. So this is the FANG index. Just the 5 stocks here, which I talked about. And I think I started last week's session here with you already. So let's zoom this out. We are making new lows for the year. So that's what I wanted to say. We have even taken out the June lows here with new lows. And what everybody is talking about is this so-called rally here. I mean, from a long-term perspective, it's hard to argue if this is even a rally here. So I mean, look at the long-term chart, and now just look at this little blip here. Where's the rally? And we are even up to new lows here on the famous darlings here we had. And what's interesting, if you do now some cycle projections on this chart, so everybody's looking at the broader markets, but let's use for a second at the FANG index here, which is taking out new lows. And I shared this idea with Peter, but I need to be sure, so there's not enough long-term data on this index to really take this as a serious projection, what I will share you in a second. So this is just for cycles research. The FANG index is a very young index, so it's quite new. We don't have so much historical data. Yeah, it's just going back to 2016, or depends on from where you source your data. But also Peter told me he has no experience on this kind of data set. So what I will show you in a second, treat it carefully. It's not validated because we don't have enough history to be secure on that. So now I will share you his projection. Here we go. So that's the chart Peter shared with me. That's his kind of stock market cycle projection based on price projection. So what are we seeing here in this chart? It's the future line of demarcation based on a nominal 4-year cycle. Yeah, which is a very raw situation that you see this nominal 4-year cycle projected into the future, and what is required always that this is the continuum, which Peter calls his continuum. It's based on 2 price lines shifted into the future based on the nominal 4 years cycle, and once price breaks down below this continuum, this 4-year downward cycle is confirmed. And at this point in time, it generates a downward price projection. So not a time projection. What we are doing is cycle analysis. This is a price projection because this is now the confirmation of the downward cycle, which started here at the top, the confirmation of the 4-year downward cycle, which has passed half the way at this point in time. And if we know the point in time when half of the move can be counted, so you just can measure from this break of this line to the top here, and then put it at the same distance to the low, because the same distance needs to be traveled to the downside until this 4-year cycle in means of price movement is completed. And then you arrive at the projection, which is Peter's technique based on the Hearst FLD projection area. There is a linear projection, which is this red window here, but he also revised on long-term projection. You should use log projections, not linear projections, which we always do. But this is the smaller box, which is shown here. So there are 2 things we see here. First, we have a clearly confirmed 4-year downward cycle projection, which is valid and in place. And there is a lot more room to go to the downside to arrive in this downside projection. So I think thanks Peter for sharing this chart here with the community and allowing us to discuss and share this chart here. Being said, neither Peter nor I have so much historical information that we can count on this information. So therefore it's for cycle education here. And that's what I started last week. So we have a lot of mixed signals out there. There's still the longward downward cycle projections, which have not been confirmed. If you take into account the shorter cycle analysis done last week and even done today, it looks like this week might be a final week of seeing short-term cycles in the topping area. And if you analyze different indices like the FANG index, similar situation on the NASDAQ. The NASDAQ has also a confirmed 4-year downward cycle projection, similar to the FANG index, very clear. Still mixed signals on the broader indices here, so we might need to monitor cycle conditions here. So that's the second topic for today. Sharing this Hearst technique here on an index. Thanks to Peter Eliades for bringing this to our attention. I'm quickly looking at your questions for a second. So maybe before I come to the last point, let's bring up some of your questions also today as we are live. So David, 10th November daily peak, then down to end of year. Yeah, that's more or less the rough timeline with the time cycles shown last week and just quickly updated this week. There might be a shift about 1 week. We never know exactly if we deal with daily cycles at this length. So therefore you need to confirm the trigger via technical analysis, which is the next topic I will share here also in the session. But in general, yes, that's the reading of the time cycles here. Yeah, the NASDAQ. Yes, let's do a live analysis, Anna, on the NASDAQ. So I will do this now. So why not? Let's add the NASDAQ to the mix here. I need to set up my screen. Just give me a second. Let's go back to our analysis. Let's bring up the cycle analyzer and let's clean up it here, and then let's get back and open NASDAQ index. Let's use the NASDAQ chart here. So here we have it. I think it's from, yeah, it's Friday. Okay, today's data is not updated here right now, but it won't matter. Yeah, long-term perspective. I mean, it's also very worrying. We are close to making new lows. This is what I showed. The FANG are already making new lows. NASDAQ is here at the bottoming, but let's now check what the cycles show us here. So standard procedure, let's start with the standard procedure, how we do cycle analysis. So therefore that you can follow, we switch to the spectrum chart, which is here shown down below. And then we look for the most important peaks in the spectrum here, which it's one at 283 days in that case. We have another peak here at 129 days. And then we have some shorter term cycles here, which also seem to show a peak here in the list. So let's add these cycles here. We also need to check then the historical data we have here in the mix. Maybe hard to guess what kind of, no, it's too short here. Let's skip that one here. So in regards to timing, so therefore the long term, that's the projection of the long term cycle here. But however, we need to be careful. I think I would not use, so let's explain. I mean, it's a little bit on the fly here, but to explain it here, we just use the last 3 years to do our cycle analysis first. And if you then observe the fit of these cycles based in the projection area, I would conclude that we have not enough correlation to trust, for example, this cycle which shows up in the spectrum here. So this peak in the spectrum here, which is selected by this cycle here. Because we have the low here and the top here, but it's still not confirmed the other cycles here. So I would not count it as a valid cycle. You also have the correlation score here in the upper left window. So yes, it's a cycle which shows up in the spectrum, but no, I would not use it. It has anyhow a low strength score here. Yeah, the other strength scores are a little higher, but that's at least the starting point. So let's not use this cycle in our prediction here. If we then move forward through the peaks, we could then switch to other peaks we see here. This is a 163 days cycle. But you see here also it's at the bottom of the list, so very small strength and even a very low Bartle score. So I would also skip this cycle here. So you see I'm going from right to left in the spectrum. So these two cycles, which we first selected, could be excluded based on different criteria on our data. So the next one is the 129 days, which is shown here in the data set, which is listed more on top. So we have the Bartle score is okay, strength score is also okay. And here we see, that's the visual inspection I'm also doing if the timing of tops and bottoms of this cycle would fit to raw data, which is, you see here, it's a very mixed. We have some hits here. So if you review just the, here's a hit by that, then, but this low is more out, and this top is out here. Question mark. Okay, this could be a hit here with the low. So 1, 2, this could be a low here. That's okay. This top is here is okay. So here we have, that's okay. Okay. 1, 2, 3, 4. It's okay, but then, okay. So it's a little bit mixed. But could be used, or could be used. So I think this cycle is in between. So this could be used. So let's keep this one here. And then we need to check what the other cycles would tell us here in that case. But they are all, you see they are blue. So the Bartle score is not very high. And you see here, even the red triangles, they have very low Bartle score. So this is, this is also a good situation to discuss, Anna, because I would say I don't see a valid cycles model, which I would like to follow here. So therefore, that's also often the situation that you maybe don't get a clue, at least from the NASDAQ, using daily cycles with the last 3 years. I don't see enough confirmation from the digital signal processing to use any of these cycles. The only cycle is these 129 cycle, which I'm showing here. But even this cycle is arguable, discussable at least, and it's just one cycle. The other cycles which show up in the spectrum here, I explained the longer one here down below, and the shorter ones, why you should not select these cycles. So, I don't come up with a valid cycles model on the NASDAQ, Anna. That's the simple answer. And that, that's live. That's also how cycle analysis works, or even not works. But at least hope it helps to see how it goes. Vishal, I owe you the Nifty, that's for sure. But there I'm also not prepared yet, and I think the show will take too long here. So Mark, good to see you again. Thanks for joining. Elides shared the 90-year cycle. Yeah. Good to remind of that and even look it up in the webinar we did with him. Thanks for bringing this up. Maybe Mike. Yes. No, not calendar days. These have been trading days. So you can switch the analysis, and I will show you because this question often shows up. Let's just clear this up here. You can, in the settings panel, you can adjust how the analysis is performed. And if nothing is selected, so in that case, none, I have not switched it on, it uses the raw data, how it comes in. And this is trading days, not calendar days. We can adjust it to calendar days, but then we need to switch to calendar days and update this analysis. And you will see then that also the detected cycles switch slightly. So we need to do the same procedure as I did before now, because on calendar days, the situation could look a little bit different. But your question is right. This looks much more better here in regards to the alignments of past lows and bottoms here. Okay. I like this even more. So, but I would leave it up to you now to follow up with this analysis. I think the procedure is clear. But at least thanks, Mike, for clarifying. Okay, so that's just looking at your question. First, we had the S&P. Second, I shared you the FANG stocks, and we did a spontaneous analysis of the NASDAQ, where we didn't see a very trustworthy cycle analysis, which we also need to take into account. Sometimes that's the case. And then, last but not least, the third topic I wanted to at least get back to you is what I shared last week, the technical situation. And I think I explained we expect from the cycles peaking possible timing top around this week, latest next week. But for fine-tuning this, the trigger, or that's the setup. Cycles give us a kind of setup based on timing. It's just a setup. We don't trade setups. We just look for possible triggers now within the setup we have. So we have a setup looking for a next short, or at least closing long positions or adjusting our risk profile and switching our risk profile. So it really depends on individual trading strategies. But we have the setup now based on the cycle. So in order to get the trigger, we should switch to the price chart and add some technical analysis, which is more in sync than with the concrete price action, not timing action. And I shared last time an interesting analysis, and I will switch back to this in a second, which I call the so-called Springboard delta analysis, which is also based on cyclic behavior. Or let's first explain it. During the current down market, which started end of last year, beginning this year, we see an interesting correlation between the price performance of bonds and stocks. So this indicator is especially situated to this market context. It will never work always because the exterior framework conditions might be different. But in this market context, so with high inflation, higher yield rates, bonds and stocks move in sync, downwards or upwards, depending on the situation. And then you can spot cyclic patterns when the performance of stocks and bonds goes out of sync. So either stocks move up, bonds continue to move down, or the other way around. So we have a divergence between the performance of these both asset classes. And when you measure this as a cyclic oscillator moving up and down, so the performance delta, we can observe a cycle in this behavior. So it's cyclic based on timing information. This is what I shared last week. So we have a 50-day cycle active in the spread of the performance of stocks and bonds. So you can really measure a time cycle there. And you can measure, and that's the trigger, extreme situations with this indicator, which is more fine-tuning to the market price conditions than to time conditions. And now switching to the indicator, and I want to share it with you. I give it away. You can use it on your own, because last week I just shared a chart, but I have no problem with sharing this indicator with you. So I use TradingView because it's easy. We are not aligned with them. It's just a free way or a simple way to prepare your charts. And this is the chart here. Let's go over it. I shared with you last week. So what you see here is the S&P index. And the performance delta, or Springboard delta, how I call it, is now measuring, and you can see it here on the chart, measuring the difference between the S&P and the TT. I think it's the 10-year, 20-year. I'm not sure right now. 10-year bonds performance here, and it's measuring the performance delta. So, and then showing this as an oscillator here, moving around zero. So if it's at zero, it means bonds and stocks are, from a performance perspective, moving in sync. Yeah, and when we are above zero, it means that stocks are outperforming bonds. So stocks move higher, bonds move down, or similar to, at least we get this outperformance of stocks versus bonds, or the other way around. Yeah, if it moves down, then bonds outperform stocks, which is at least in this market context, which we are currently in, very interesting. And what I've marked here, the situations when this oscillator from a top top reading. So there's more to read in this oscillator, but from the top reading, every time this oscillator goes above the upper dynamic bands, this was more or less the end of past rallies we have seen this year. And I shared this indicator already at end of October here as we approached this level exactly at this point here, highlighting that we could have a trigger and the current or the past rally here in the second half of October should come to an end, which it did exactly as projected by this indicator here. So, I mean, we have not started the large down leg here, but at least the rally stopped exactly at the same point in time here. That's what I shared also last week here, but you can find this data, this indicator now on TradingView and use it on your own. So I think just search for Springboard Delta in, if you go to the chart and open an indicator, if you go to indicator and search for Springboard Delta, this is what I show you here. It's available now. I've published this indicator, bonds versus stock performance, and then you can play around with it on your own. Be careful, you need to know and understand what this indicator is doing, but I hope I explained it to you. Use as input the, let's use it here. So here you see the indicator. You can adjust it within the configuration panel. So I think I have set it to 6 and 3. It's just a little bit averaging. And then I use the SPX, S&P 500, and the TLT. And then you have this indicator as oscillator below whatever index you're monitoring here. So that's exactly the setup which I used to show it here end of October. So try to use it, try to follow it. Maybe it's worth a little bit play with it. I share it here not because we're doing technical analysis, but if you review the session I did last week, there's a 50-day cycle in this divergence between performance of stocks and bonds, which is also interesting. Cycle analysis. I mean, we are not here to predict stock markets. We are here to analyze cycles in stock markets, and that's an interesting cycle if you analyze two asset classes. Sometimes the way how you analyze cycles this way is much more useful than just looking at one raw data set and performing the digital signal processing. So that's why from time to time I bring up these ideas. And Mike, I think I showed you a second ago how to get it. So use TradingView, just search for Springboard Delta. Like I shared here, you will find the indicator and you can apply it to your chart. Okay, that's it for today. Epis, you're bringing up a good idea here. Maybe I will take this on my list for next week. So, thanks for joining. Thanks for bringing up again some questions. Just adding some live analysis on the NASDAQ, even though no clear conclusion on that analysis, Anna. But that's what I like and what I like to continue next week, Monday. Same time, same place. Thanks for joining. Have a nice week. And hopefully we will meet again here next week, Monday. Please share, like, add a comment.